And now, The Money Show
with Stephen Grootes on 702.
Let's walk the talk.
The Money Show with Stephen Grootes is brought to you by Absa Corporate and Investment Banking, proud sponsor of the African Mining Indaba 2025. Good evening. Welcome to the program. Good to have you with us on The Money Show this evening. I was reading today of several reports around BankServe, and they do an index that shows basically how much money is moving through the economy and sort of where it's going, kind of. I mean, there's a lot of information that tries to do that. And they suggest that local take-home pay, in other words, the amount of money that you are taking home, was up by 12% year on year in December. That sounded like a lot to me. 12%. Are you feeling 12% richer now than you were, let's call it, at the end of 2023? I'm not sure that I do. I mean, I realize that as one gets older, you just feel poorer all the time because the price of things goes up by so much. And I realize that's a sort of superfluous way of looking at it. But the fact is, I was intrigued by that comment. And it goes into a whole lot of other things. So, for example, there's been the change in sentiment. Everyone's spoken about it. Of course, lower interest rates as well. One of the things they point to is greater corporate profitability. In other words, companies are making more profit. So here's the question that I think would follow from that for me, which is that if that is the case, there should then be a lot more demand in the economy. If your income is up by 12%, well, you have more money to spend. You have more things you want to buy. You're going to go and get the car that you always wanted, or whatever it is. A video machine, who knows? Anyway, that's a joke. So what I'm trying to get to is I'm not sure that we're seeing that. If we are seeing that, though, it would be the beginning of a virtual circle in our economy. A virtual cycle, and that would be a very good thing to have, to start to see that change. But still, 12% seemed to me to be really quite a big increase. I was struck today also, Hyprop were reporting some of their findings over the December period, and they suggested that, in fact, the number of people who went to their shopping malls was up sort of 0.4%. Now, it doesn't sound like a lot. It does sound like a lot, though, when you consider that people have been talking about the end of retail shopping or the beginning of the end. Everyone's been talking about online shopping. To put it another way, if everyone is, according to Checkers 6060's numbers out yesterday, shopping online and the groceries are coming to them, over December people are still going to shopping centres. So if you remove some of the grocery trips, and if you consider all the competition from, Pick and Pay and Willie's Dash and all of that, fewer people must be going to shopping centres just to buy groceries. Well, that would then be quite significant, that you're still getting more people coming to some of the biggest shopping malls, Canal Walk, Hyde Park, name the one. And that to me is very interesting. I found that fascinating. The other thing that was interesting today around artificial intelligence, and we'll be talking so much about this, of course, over the next little while, is that after all of the fuss and bother around DeepSeek and still lots of commentary coming through on that, you also then get a news today that despite the fact it's the Lunar New Year in China, their sort of big annual holiday, you actually have the release by Alibaba of their new AI model. What that gets to me, is that this sort of race for artificial intelligence is not really as just between the US and China, which is what we've been talking about, but is certain different companies within them. There's a kind of intra-China competition and intra-US competition, which we've sort of known for some time. But it is interesting to think about it in that way, just to sort of think about it not as a race between countries or between, groups of countries or even groups of companies, but inside countries as well. And it would seem quite likely that the governments of both China and the United States are actually going to try and harness their companies together to compete against each other's country, if you see what I mean. I think that's going to be very interesting, and we watch it play out. We'll talk more about artificial intelligence. We'll talk about interest rates and inflation tonight. Good to hear from you. 011 8830 702 021 446 0567, and of course voice notes this evening on 072 702 1702.
702. Stephen is on The Money Show.
6 to 8 p.m.
Well, there's pretty much consensus that the U.S. Federal Reserve will hold rates this week, and our Reserve Bank expected to give us another 25 basis point cut tomorrow. The way in which inflation is being calculated is changing fairly dramatically. Stats SA calculates inflation through examining the prices of a range of goods and services. It's often called the CPI basket, and they also give weightings to certain categories. In other words, transport gets a certain weighting, food and beverages gets a certain weighting. That's based on how people are using using those goods and services. Those weightings are changing too. Patrick Kelly is the Chief Director for Price Statistics at Statistics South Africa. Patrick, good evening. Good to talk to you on The Money Show. Thank you. So the basket is changing. What do you base those changes on? How do you know which goods and services to keep, which to include, which to remove?
Right. Good evening, Stephen. Yes, well, the basis of how we do this is a very large survey that we do of households called the Income and Expenditure Survey. We also released the results of that yesterday. This survey asks households what they spent over a particular period of time in a lot of detail. We aggregate all of that. We then combine that with a range of other data sources, some of our internal Stats SA data that we might use for the GDP, as well as data that we get from the private sector, including point of sale data from retail stores. We put all of that together. We then allocate value that households as a collective would have spent on those particular list of products over a year, and we then select the most important ones.
Okay, so for example, your surveys have shown you that rosé wine is now at a point that it needs to be included, and it wasn't really before.
Yeah, that's absolutely right. So we've identified 71 products that were not part of the CPI basket previously that are coming in, and we've identified 53 that at some stage were more popular, but spending on those has decreased somewhat, and they're being let go from the basket.
Okay. The changes also tell us something about how our society is changing. So from what I understand and the way you've changed the weightings, households are spending less on alcohol, less on transport, but more on food. I mean, that tells us, and that's as a proportion of income, I presume, that tells us something quite important.
Yeah, I think it does tell us something. And in particular, in the food category, it was the cereal products, so your staples, maize meal, bread, etc., where we saw the big increase. So that would certainly be something that people would consolidate down if perhaps they are not feeling as well off as they might have previously been. Yes, and we saw slight dips in some of the other categories that you've mentioned, including housing, which is the number one largest weight item in the CPI.
I mean, for most people, rent or your bond is the biggest expenditure. I mean, that's kind of almost universal around the world. You know well in advance you're going to make changes like this, all in the calendar years in advance. How do you ensure a change to the basket doesn't lead to a distortion of the CPI? Maybe I should put it like this. How do you account for the changes in your final figure?
Yeah, sure. So actually what we do at the same time is a kind of technical exercise that we call rebasing or re-referencing the indices. So the real nerdy listeners out there might go to the CPI publication each month and have a look at the actual numbers, and they'll just see a bunch of indices with percentage changes. So what we do is we re-reference those indices all to equal 100. It will be at December last year. And that allows us then very smoothly to introduce changes in weights, changes in products, without making any distortion to the overall CPI numbers. There is obviously some comparison of last year's basket to this year's basket to get a year-on-year rate of change, but those don't really have any impact on the actual inflation rates.
Okay, some of us who sat in the back at school do read your monthly report, Patrick. So that means then do you run sort of, you could actually look at the numbers, work out what the new basket is, and work out what it would have told you about last year's inflation. If you wanted to, you could probably do that.
Well, we don't actually have prices for the whole period of last year for the new items.
Right.
We only do a double collection in December so that we can work out a month-to-month price change. So you could apply the weightings going backwards and see what sort of numbers those gave you. We haven't actually done that exercise, but it would be not really possible to say if we had this basket a year ago, what would inflation have been? Mm-hmm.
Patrick Kelly, thank you very much indeed for the clarity. Really appreciate it. Chief Director for Price Statistics at Statistics South Africa. Well, ahead of the big decision by the Reserve Bank and ahead of what seems to be a consensus forecast that it'll be a 25 basis point cut, a call today for the Reserve Bank to in fact cut rates by 50 basis points. It comes from Samuel Seeff, the chair of the Seeff Property Group. Samuel, good evening. Thank you for your time. We understand a bigger cut would be good for the property market and I suppose may be good for your group too. But why do you believe it would be good for everyone?
Good evening, Stephen. Yeah, I think a proper interest rate cut, and I consider 50 basis points to be a proper cut, to be good for the interests of all South Africans. I think that if we look at the country at the moment, we've got two big factors that we really need to be considering. One is the lack of growth in our GDP, and concomitant with that is the lack of decrease in our unemployment rates. And having these interest rates at the levels they are, which I believe are artificially high, I think we are one of the highest current countries with the highest interest rate level compared to inflation. I think it's ludicrous. This country needs growth. It needs growth in its GDP. It needs to have people investing in the country. We need to increase unemployment and to, in my opinion, mess about by maybe cutting 0.25% now and then going slowly. What does that do for us? It doesn't help us. We need to grow the economy. We need to give more jobs, and that, I think, will be beneficial for all South Africans.
So, I mean, obviously that would be the case, at least for the short term, but you'll know the argument against it. The geopolitical situation is complex, difficult to predict right now. There might be tariffs coming from the US President Donald Trump. That would lead to higher inflation. And in a country with such inequality, where inflation hurts the poorer more, inflation is the bigger enemy, would be the argument.
I understand that fully, and I do believe there's merit to that argument, but not as much merit as bringing interest rates down and giving those people who are poor or who are unemployed a job. And I think first and foremost, this country needs to look after its own needs. I am pretty convinced that if you get to a situation of GDP growth at 3% and more, what you'll find is our exchange rate will strengthen. People will say, there's a country that's doing things, it's booming, things are happening, let's go and invest there, and our exchange rate will recorrect to the levels which, in fact, I think should be even better than we are now. I think we're artificially hoping that our interest rates will provide investors to come in and invest in South Africa, when the real truth is that unless we get our own to invest within this country, it's not going to happen. The best way to get South Africans to invest is to reduce interest rates.
The other thing that would obviously get the property market growing is confidence, and that's not just about interest rates. Of course, it's a big factor, but it is also about confidence in the future. And I wonder if people, yes, they've seen the government, the national coalition, yes, interest rates are going down. They're looking around Joburg and thinking, not for me, thanks.
Look, that is clearly, and you're absolutely correct, confidence is the single most important factor in people deciding to invest or not, deciding to purchase a property or not. The Government of National Unity has given a bolster to that confidence. Interest rates coming down have increased, and in fact, we've seen activity in Johannesburg of late. But what really needs to be done there is that the local government, the city has to start improving its role in what it plays in terms of infrastructure. Traffic lights that aren't working, it's just not acceptable. Potholes, etc., it's not acceptable. They need to get working, they need to sort things out, and they need to deliver a proper infrastructure which gives confidence into the future, as you say.
Samuel Seeff, thank you so much. Chair of the Seeff Property Group.
On 702.
Monday to Friday, 6 to 8 p.m.
Well, confirmation today that finally revenue from tourism is now higher than it was before the pandemic. And in fact, tourist accommodation venues made more money in November than they did the year before, by the tune of around 12%. Leanne Back is the director of the Tourism Specialist Unit at BDO South Africa. Leanne, good evening. Thanks for your time. It's been a long time coming, but it seems that tourism has taken almost forever to go back to where it was before COVID.
Stephen, it sounds good. It's actually not there. So the information is actually misleading. So yes, accommodation is performing quite well, but it's only got to do with rates. It's not got to do with demand or with occupancy. And in fact, we have not recovered when it comes to tourism. And if you look at our tourism arrivals and our receipts, we are actually 13% still behind 2019. Sure. And in fact, our good year was actually 2018. So we're even further behind than that. So last year we got 8.9 million visitors, but we had 10.2 in 2019. And globally, tourism is basically back on track. So they're at 99% of 2019 levels. So we are not doing as well as we should have. And in fact, if you look at these lost tourists, so we're roughly 1.5 million tourists behind where we should have been in 2019. the value, that direct spend of those 1.5 million tourists is 20 billion rand in our economy that we've lost. So although the rates are good, we could be doing so much better.
Sure. Where are we shooting ourselves in the foot somewhere? Have tourism patterns just changed? Do people not want to come as far as South Africa from Europe or America or China because of the pandemic in some way? Has something else happened?
We haven't put enough attention to ironing out our own goals. So the visa issues, the air access issues. In fact, if you look at our overseas visitors that come by air, we're down 17% compared to 2019. So we can see that from an air access point of view, we've got a problem. We don't have enough flights. We don't have enough direct flights to main markets. And then we know we've been struggling with visa issues, which are hopefully now are being rectified with the new minister and the focus on changing our visa regime and how we handle genuine tourists to our country. But that obviously hasn't kicked in yet, and it doesn't reflect on our 2024 numbers. We are hoping that that's going to change. Another big area that we haven't done enough of is marketing our country. And yes, you can say we've got issues around flight shaming and people not wanting to travel too far. But the thing is that East Africa is doing well, and we're not doing as well as East Africa. So we're losing out to other African markets, to other markets. So we need to do more. We actually need to put money into it, and we need to spend, and we need to market our country. We know we've got a beautiful country. We've got a beautiful people. We've got something fantastic to sell. We've all just got to come together and make it happen.
I mean, how important are flights? So, according to the numbers that you've also just sort of said are not entirely correct, I mean, arrivals from Brazil were up quite dramatically, and that can't just be, well, I don't know. Is that just because SAA is flying there again?
Okay, so yes, arrivals from Brazil last year were up 94%. Fantastic. And it is got to do with the fact that SAA is flying there. But, Stephen, if we look at the numbers, we had 50,000 people from Brazil last year coming to South Africa. But in 2019, we had 77,000 Brazilians. So, yes, it did have to do with the reinstatement of the flights, but we're not back to where we should be. So that's why I'm saying the numbers are correct. It's just not the full story. And also when you look at Central and South America, yes, we were up 23% last year, so over 2023 data, but we're still 46% behind where we were in 2019.
And from what you say,
yeah.
Sorry to interrupt.
Yeah.
But let me continue if I may. I mean, from what you say, it doesn't look like there's much prospect of a quick recovery from here.
Yeah, we need to do more. And of areas of concern for me are our primary markets, our big markets. The USA is on track, which is great. We're back to where we were 2019 levels. UK, we are still 20% behind where we were in 2019. If you think about it, we had over 400,000 visitors from the UK in 2019. 20% behind on that. It's a big market. So that means that in 2024, the USA has actually surpassed the UK as our main source of overseas tourists. Germany's down 21% on 2019 data. So we've got all these sort of figures. China is a big area that we need to work hard on. I mean, in 2019, we had 0.06% of their market, their outbound market. 55 million Chinese traveled overseas in 2019, and we had less than 100,000 of them came to our country. Last year, we had 41,000 Chinese, and an estimated 120 million of them traveled overseas or outside of their country in last year. So that we halved our market share from 0.06% to 0.03%. So sure. And this is, again, it's a lot of it's got to do with the own goal issues. We need direct flights. We don't have enough flights to Eastern countries at all. We've got visa issues that we are trying to tackle, but it's important that we all make sure that these actually work and open up these markets, because these guys can spend money, and that's what we need. And tourism is about creating jobs. We can create so many wonderful jobs and spread them around the country in rural areas. But we've got to, as I said, we've got to put our heads together and make it work.
Leanne Back, thank you so much. Advisory Director and Tourism Specialist at BDO South Africa. Well, fascinating. Just the correct way to look at those numbers.
The Money Show.
The markets.
Chris Stewart's Portfolio Manager at 91. Chris, good evening. I mean, most of the action really happening overseas. Everyone's still looking, of course, at what happened earlier in the week around AI. But the news flow changing, and today the focus on the Fed meeting, despite a sort of almost consensus, there won't be any change.
Yeah, good evening, Stephen. Yeah, we are waiting, I guess, for the Fed, and I guess we're not waiting for an outcome different to what is expected. In other words, for the Fed to put a pause on the interest rate cuts that they've been implementing of late. I guess all the action will be around analyzing every nuance of the Fed speech, and whether this turns out to be the sort of dovish hold that everyone is anticipating, setting up the environment, I guess, for a further cut in the Fed funds rate come March, all of which needs to be done without being seen to be, if you like, getting bullied by President Trump, given the comments that he made in his talk at Davos last week, essentially saying that he would like to ask the Fed, instruct the Fed. I'm not sure what exactly happens to central bank independence inside Donald Trump's head, but instruct the Fed or ask the Fed to cut rates. So, a little bit of a tricky road to be navigated in terms of the speech accompanying what is, as you say, widely expected to be the Fed going on hold this evening.
It was curious to me that European stocks were so high today, despite all of the chaos we saw on Monday and Tuesday in the US. I mean, you would think they might take a breather before they recovered so strongly.
Yeah, I guess, there's a couple of very interesting points in what you raised there. And that is, one would be forgiven to think that this is quite a tough time for markets, given some of the rhetoric you hear on a daily basis, given some of the headline noise coming out, and given the, I guess, widely quoted view that markets have done an awful lot. Markets are very stretched, valuations look very high, et cetera, et cetera, et cetera. And, I guess one needs to just take a step back, make a couple of points, and that is that the global environment is still one of growth. It may be slightly sub-trend growth, but there is certainly still growth. The inflation outlook, albeit uncertain, given some of the noises President Trump is making around tariffs and the potential inflationary impact thereof, the inflationary environment globally is still moving in the right direction. And as a consequence of that, monetary policy globally, by and large, is still moving towards a more stimulatory bias than it has had, all of which is reasonably supportive for risk assets. And the other point one needs to just bear in mind is that the rally in markets that we've seen in recent times has been quite narrow. And what I mean by that is it's been a small number of very large market capitalization stocks that have been responsible for a very significant portion of the rally in global equities, and particularly US equities. And it's in fact a small number of stocks with a large weighting in the index that is also making those indices look quite expensive from a price earnings multiple perspective, for example. And if in fact you look at markets absent some of those stocks, you'll see that they haven't run nearly as hard as they appear to have run, and they're not nearly as expensive as they might appear to be. And as a consequence of that, I guess we can understand, I guess, why markets are continuing to gently track northwards. And I guess one specific data point that came out today, we saw ASML listed in Netherlands, which effectively, crudely, one can think of as Europe's Nvidia, if you like, reporting their fourth quarter turnover sales numbers today and their order book, all of which looks pretty good, which is, I guess, undoing some of the bad that was done by the stories around Chinese AI and DeepSeek being able to do what everyone else is spending fortunes of money doing, and what Nvidia are selling extremely powerful and expensive chips in order to achieve for a shoestring budget. Another interesting point around that is that there have been, I guess, allegations raised globally today that perhaps some of what DeepSeek has done has been built on the back of AI technology that has been improprietarily acquired from the US. So, there's a lot of stories that are causing some of the damage done earlier in the week to unwind it a little bit.
Chris Stewart, thank you very much indeed. Portfolio manager at 91.
The Money Show
With Stephen Grootes, live on 92.7 and 106 FM. Streaming on the Prime Media Plus app.
and DSTV channel 856.
Well, we were talking a little earlier about how new figures suggest that take-home pay is up by 12% year on year towards the end of last year. That did sound like a lot to me. I don't know if you're feeling that. A story that might well affect you as well is something happening over the last couple of days about how companies like Microsoft, for example, try to keep you subscribing to their services. I have several services that I use on a sort of daily basis. You pay a monthly fee to use them on your computer, whatever it is. I'm sure you're the same. And it seems that some of these companies are not entirely honest about their offerings. One of the things they use is a kind of dark pattern. It might be something that has happened to you. 011 883 0702 and 021 446 0567. Jan Vermeulen is the editor at My Broadband. Jan, good evening. So in this case, Microsoft were increasing their prices quite significantly by about a third, and there was a way to keep the old price, but they were not really upfront about it. How would you do it?
Good evening. Yeah, so this is something that was discovered by a New Zealand tech writer who found it because they'd actually implemented this new pricing strategy in New Zealand in November last year. And he found that if you cancel, if you click on the cancel button, you're like, okay, no, I'm not going to pay this price. I'm going to cancel my subscription to Microsoft Office. Then you get presented with the option to switch to a different price plan called Microsoft Office Classic, which is at the old price. And so essentially what Microsoft was doing was actually not a price increase through the line price increase, but it was actually implementing a forced upgrade to a new product that includes this new artificial intelligence co-pilot features. And it was hiding that fact.
Sure. Okay. I mean, this works the other way too. So, for example, I might subscribe to a certain international news product. I will see fairly often, I pay a subscription 1 or 2 years in advance because it's a fair amount of money. And I find that actually you can now get offers for a much cheaper price in rand terms than what I paid. If you're a new subscriber, then the deal is very, very good. And I mean, there are plenty of international news organizations that do that. They won't be the only ones. And that's quite frustrating from the other side.
Yeah, exactly. So, but this is the nature of a subscription model. Is and often you'll see that companies that offer subscriptions, then when they run the numbers, they're like, okay, now hang on a second. If we offer this much discount over this 12 or 24 month lock-in period, then that actually makes us more money than trying to keep the price at a certain level. So there's all kinds of complex financial calculations that go into this to calculate those prices. But yeah, I mean, it's something to think about and watch out for is the specials, I guess, that come across with subscription services. And often you can lock in that lower tariff for quite an extended period if you're patient. But you have to kind of threaten to cancel or even cancel and then remain canceled for a month or two. And then you'll get an email in your inbox to go, hey, would you like to come back at a discounted price?
Sure. There's a thing called a dark pattern, or that's the phrase that's been given to it. What is that?
Yeah, so dark pattern, I believe, comes from the concept of design patterns. Design patterns, I think, is got its roots in architecture, and it was adopted in computer programming to talk about good practices to adopt in programming. And so a dark pattern is the inverse of that. It is a bad pattern, but it's a good pattern if you want to manipulate people but considered an underhanded or downright evil thing to do. And so that's essentially what a dark pattern is. It is a template to follow to manipulate people or situations so that you get the best outcome for you to probably the other person's detriment.
All right. So, I mean, it's a bit like you're basically about to do something immoral, maybe is another way of looking at it. I suppose what this also means then is that you need to be very careful about your subscriptions and manage them a little bit. And, I hate this, Jan. You need to read the fine print. I mean, it's a bit like your Facebook settings.
Yeah, it is a frustration. And our CPA is really meant to protect us from stuff like this. And in fact, the feedback that we received is that it should, and that our regulator would just really need to enforce it. It would need to sharpen its teeth and claws and actually do something about this. So yeah, while, in America in particular, which is where a lot of these dark patterns are rooted, they employ all kinds of tricks, from teaser rates on subscription services. So they'll advertise, you get this for $12, but after weeks, 3.5, the price goes up by 4 times, or whatever the case might be, and they do that often. And that kind of stuff gets implemented across the board for subscription services, even in countries that have stronger consumer protections than in the United States. And in countries like South Africa, where those consumer protections aren't properly enforced, we then get, the short end of the stick. But the same kind of treatment as Americans do, rather than what you might expect in Europe. And so, yeah, that's part of what's going on there. And you do have to manage your subscriptions or switch to alternatives. Obviously, the most powerful thing you can do as a consumer is vote with your rand. Now, in computing, it doesn't come without effort, because it either means switching to a platform like Apple, which can come at a premium unless you are already using professional laptop products and Microsoft Windows and Intel products. Then they sort of there's price parity there. But if you're on the entry-level side of things, there's not really a lot on the entry-level side in Apple. Or you need to switch to something like Linux and the free software and open source software available on that platform to kind of send a signal to Microsoft that you're unhappy with the state of affairs. But there are choices out there for all of these services. You don't have to accept the subscription models that these companies are offering.
I'm always fascinated by the scale of it and the amount of money they get from different places. Let me just explain a bit further what I mean. So, for example, if you're a customer in the US and you're paying $10 a month for something, that's not a huge amount of money for you. But if you are in South Africa and paying $10 a month for something, that's about 200 Rand. And so it's completely different, And that means that Microsoft, they've been, in South Africa and selling in South Africa for years and years and years. They have to price their things quite carefully. I'm sure there'll be someone who spends the time and effort. Can you imagine getting a VPN or something just to get a lower rate in certain places? I'm sure they fight that quite hard. The point is that you get the economics here are completely different to the economics in the US.
Yes, and so a lot of these international or multinational companies do the effort to price accordingly. Microsoft was one of them. And so it's recently gone through a huge spate of price increases across its products. Microsoft Office is just the latest one, the Microsoft Office subscription service, I should say. So they increased the price of their Game Pass service and stuff last year that everybody was quite unhappy with. And while you generally still get a good deal in Rand terms if you were to compare it to the US dollar prices, things are trending towards the negative for South African consumers, where despite if you look exactly what you're saying, purchasing power-wise, we're really losing out when things that are priced in dollar just essentially get converted here. But another standout example of a company doing good work there is Valve. It's another gaming multinational, huge gaming company that provides a digital game storefront, and they convert. They have a mechanism to convert prices, or rather price properly in Rand and somehow take purchasing power into account. And then, yes, you have to have strict controls in place to make sure that people don't VPN and juke the system. Other streamers are another good example that price a better, that price according to purchasing power. So Netflix and the like, either offer products that are specific to our region, or they price in such a way that that it, purchasing power wise, you're not cutting out a whole bunch of the market because of just converting from dollar to rand.
Jan Vermeulen, thank you so much. Really do appreciate the time. Editor at My Broadband. And if you want to know a little bit more about purchasing power, just Google the McDonald Index, or the Big Mac Index to give it its full title. It really is about how much money in real terms it costs you to buy a Big Mac in Switzerland or in Argentina. Somewhere in the middle of all of that is South Africa, and that gives you a real indication of how much purchasing power your currency actually has. 7 minutes now to 7.
You're listening to The Money Show with Stephen Grootes, brought to you by Absa Corporate and Investment Banking, proud sponsor of the African Mining Indaba 2025.
Well, the launch over the last few days of what's called the University Technology Fund 2, 400 million rand, that's supposed to commercialize research generated by South African universities. You consider how much of what you do on a daily basis has come at some point out of research done, often at a university. Well, you can understand why this is so important. Daniel Strauss is partner at Stocks and Strauss Fund Managers. Daniel, good evening. There's support from companies like yourself, support from philanthropic, I can never say that word, from big charity groups. What you're trying to do, obviously, is what other countries do as well.
Yes, thank you so much, Stephen. The University Technology Fund 2 is really to keep the momentum that was started by University Technology Fund 1. And our big intention there was to prove that intellectual property and technology from South African universities is an asset class worth investing in. And the best way to prove that was to get other commercial investors to also invest in these technologies. And for every 1 rand that we invested in University Technology 1, we raised an additional 3 rand directly into these companies. So it is amazing to see what South African universities can achieve.
There are obviously models to do this. I mean, particularly the US and the UK do this, I think, quite well. There'll be other places. Is there a particular model to sort of commercialize what a university is doing?
Yeah, so the great thing is that the chairperson of our investment committee is a guy called Tom Hockaday, who was the pioneer in creating the University of Oxford ecosystem for commercialization. So it's great to have a global leader on our team to guide us, and he has been on our investment committee since January 2020, and he continues to be on our investment committee. So it's not always a one-size-fits-all, but there's definitely a pattern emerging.
Are there particular areas of research that we're doing that we could make money of? I mean, WITS has just launched that massive, it's not really a planetarium, it's a sort of dome. Are there particular areas where we have a competitive edge, for example? I mean, I can think of some of the sort of economic stuff coming out of the University of Stellenbosch during COVID might be a good example. Are there other things that we're doing where actually we're a little bit ahead? HIV research, I would imagine.
Yes, 2 companies that we invested in, I believe, are really on the forefront globally. The one is Hyrex Biosciences. It's a bioinformatics company that does DNA sequencing in hundreds of labs globally. And then there's also a company called CubeSpace that was recognized by NASA and trusted by more than 250 global customers for satellite component and control systems that they manufacture right here in South Africa.
There are a couple of things you need to do well to make this work. I mean, you can make a ton of money. I mean, and so you should. Well, not you, but, you know, the commercialization process should be able to take things that have never been done before and make a ton of money out of them. It is a very competitive field, though, particularly in science, and you're up against people who are incredibly well-resourced. I'm talking about the rest of the world.
Yes, but luckily we have the South African spirit. We never give up. We are in the forefront in various things. I mean, the first art plant was done in South Africa. There's so many other firsts from South African universities. So, yeah, we're keeping the innovation up, and it is just an honor to be part of this industry and ecosystem.
There must be very interesting debates about what you think is going to make money and what you think isn't. I mean, those must be the conversations to sort of, listen into.
Yeah, so, I mean, obviously we look at the economics, the unit economics, the business models of these companies. Some of them are still very early stage. They are literally there's different technology readiness levels. So some of them have taken 20 years to be patented, and then they're ready to commercialize. So, yeah, there's some strong debates going on, but it's very positive, and I think that the outcome is always good for the ecosystem when we have these debates around what can actually be commercialized and successfully commercialized.
Thanks very much indeed, Daniel Strauss. Really appreciate it. Partner at Stocks and Strauss, the fund managers. And obviously you want to commercialize the research that is coming out of our research institutions. You want to make sure that it pays for itself, pays for all sorts of other things if it's done correctly. All sorts of interesting questions around that, of course. Plenty to come in the next little while. Looking forward to hearing from you. Your expectations from the Reserve Bank tomorrow. 011 883 0702 021 446 0567.
And now, The Money Show
with Stephen Grootes on 702.
Let's walk the talk.
The Money Show with Stephen Grootes is brought to you by Absa Corporate and Investment Banking, proud sponsor of the African Mining Indaba 2025. Good to be with you this evening. Glad you're with us too. 011 883 0702 021 446 0567. And good to hear your voice notes on 072 702 1702. You may have a thought about the conversation earlier around interest rates. We're expecting that big announcement tomorrow. Also, conversations to come around artificial intelligence. Of course, what would the Money Show be without a conversation around artificial intelligence? And then there's an interesting story today about a big tax victory. One person essentially beating SARS in court. Hardly ever happens. It's a bit technical, but we'll get to the bottom of it in just a couple of moments. Also, and you really do want to stick around for this, your shapeshifter this evening, all about education. You know how important, of course, education is. And to change education. And Kanyezi Makari is the new CEO at Future Nation Schools, and we'll be speaking to her about what is happening with education, about what must change, but also, and I suppose this is the point about education sometimes, is you need to focus not just on what must change, but on what can be changed and what can't. I'm always amazed that my children are taught, generally speaking, with a blackboard. Sometimes they're, in a room with something a bit more fancy than that. But they're basically taught in the way, to an extent, in the same way in which my grandparents were taught, with a blackboard. I mean, it is astonishing. The only thing that's really changed is that a lot of the blackboards are now green. Otherwise, it's pretty much the same thing. Now, I think that's probably the case in many, many places. I realize there are tablets, there are computers, there are things like that. But a lot of it is someone standing in front of a group of young people and saying this and that and X, Y, Z, etc. There's a lot to it. We'll talk about the changing face of education. And if you consider how, and this point has been made many times, our biggest problem over the longer term is actually the number of people who are not able to finish school and thus get jobs and a sustainable income for themselves. Well, I look forward to your shapeshifter tonight and just to try and get a better understanding of what she is looking at and how this is going to work. And Kanyezi Makari, of course, on your radio from around 7:30 this evening.
The Money Show.
Business Unusual.
Well, so much focus, of course, over the last few days by what's happened because of the release of DeepSeek. And there was news today. This is, of course, the cheaper Chinese artificial intelligence model. News today that Alibaba has released one as well. And suggestions by Richard Mulholland, you know him, of course, that this is actually creating a space revolution. Richard Mulholland is the founder of Missing Link and Too Many Robots. Richard, good evening. Good to talk to you again. What do you mean by a space revolution?
Well, I guess what I mean is more of a space race. So Trump recently did yesterday or the day before, he said that basically he felt that American tech companies had to go and, win this race to be the better AI, and that we are now learning from a Chinese company. And my concern is that, first of all, this isn't a space race, right? So it's not the same as, we've got to land on the moon, because that was a finite game. But I do worry that if we encourage people to move into this space quickly, that's not a good thing. We should be trying to move forward. Definitely, I'm an AI optimist, but I'm not sure if what I really want tech companies doing right now is feeling that they're in a race trying to win something. I think that could be disastrous for us.
I mean, in the case of the space race, you're talking really about the sort of 1960s, the launch of Sputnik, I suppose ending with the Americans landing on the moon, sort of. There was a lot at stake. Part of it was about ideology. Part of it was about national interest. JFK could say, and of course, Robert Fitzgerald Kennedy's before the Senate right now, but I think it was his uncle JFK, could sell it to the American people on the grounds that to keep them safe, Americans had to get to the moon first because of the Cold War. This is quite different in a way, and yet artificial intelligence can, from what I understand, perhaps absolutely be used as a weapon. The same kind of national interest will come into it.
Right. I think the long and short of it is that there's a lot of unknown. I mean, Trump literally said the release of DeepSeek AI from a Chinese company should be a wake-up call for our industries that we should be laser-focused on competing to win. Now, I don't know how you win AI. And I don't think that this has to be a competition. I think what we need is to work together as a world and to keep on growing on the progress made by other companies. So what we've learned from the efficiency of DeepSeek will allow Gemini or OpenAI to grow that way. But if we see it as a race, then everyone is panicking to spit out builds of new AI models that haven't been fully tested. And, as we're on the verge of what's been promised to be a artificial general intelligence, I'm not sure that I want people rushing without guardrails.
What may scare me a bit more is that in the original space race, it was really two countries, or the sort of military-industrial complexes of two countries, which involved a kind of fusion of the private sector and the government sector, certainly in the States. Here, you've actually got companies against each other, and this is about the profit motive. And as we know from human history, people will do almost anything for money.
Yes, and so that is this, but now being tied into a national identity, that brings certain problems. I mean, if you remember, even in the space race, there was, two terrible crashes that happened, and luckily only a handful of people died there. But because we were rushing to do something, risks were taken. I think the risks being taken by AIs are something that could be relatively bad. Now, if it was simply commercial and just commercial interest, then that would be one thing. But as soon as it's turned by a president into a national identity, it's kind of forcing the hand of people to move quicker than they necessarily have to. And I think that the way that the world needs to be thinking right now is more, I think we need to be thinking about what are we going to do collectively? What guardrails are we going to put up? What conventions are we going to do? Collectively, we should be seeing this as a cooperative game to advance humanity through amazing technology, not as a competitive game that we should be trying to win. And I think that's what's really bad. This goes back, another metaphor would be, the lack of regulation around the subprime mortgages. Only after that crash happened did things like the Dodd-Frank regulations get put in place. But what we need to be doing is to make sure that if we're just rushing ahead blindly and not working together internationally around this space, I don't know. I just really do get nervous for what could happen. As much as I'm optimistic about all the cool stuff that we'll be able to do.
So I share your concern. Let me argue with you for a moment for the sake of it. So there was a time just at the very beginning of the sort of internet, or the internet moving from the sort of specialist sort of DARPA kind of thing in the US towards becoming more broadly accepted, when obviously Netscape was really seen as the first browser, and Google came along, and there'd been competition before that, and once Google got too big, even Microsoft couldn't really compete with them, despite all sorts of tactics and money being thrown at it. And to a lot of people, I think you would say, has Google been good or bad for you? And my first answer would be it's actually been incredibly good. It works. It's simple. I use an Android phone. The system works, keeps everything safe. If I want to know what's going on, I use Google, even when I'm on an Apple product, for example, and it costs me nothing. Now, there are the consequences to that. I'm a journalist, so I happen to know that Google has, taken a huge amount of revenue from traditional media organizations, for example. But my first instinctive answer would be, what you worried about? There was this kind of competition at the beginning of the internet, and it worked out for me.
Right. And I do agree that it will work out for us. And I think that, I am absolutely an eternal optimist in this space. I think we've spoken about this before. But we could look at this, right? We must be aware of post hoc rationalization. If I looked at Google now and the internet, has the internet made me better and happier? I would say, using myself as a case, my knee-jerk reaction would be yes. And I think if you were to analyze most, humans, is humanity net happier that the internet exists, or more stressed and anxious that the internet exists, or social media exists? I think we'd probably find that the numbers on social media they've probably been worse than they've been good. The utility value relative to the anxiety that they've created could be bad. Now, that's all very well and good. And, humans, we move around and we fix things. I just think with this particular technology, with what we're trying to do to create super intelligences that are orders of magnitude smarter than we have ever been, I think that we need to be we need to tread a little bit more carefully than we do, but then when we create a communications network that allows humans to talk together with more efficiency. So the one is simply a tool that interconnects humans. The other is a tool that potentially bypasses them. And again, I am largely optimistic about it. And I do think that we'll figure stuff out, and that's going to be part of the adventure. I just do think that in this space, I do believe we should be progressing very, very quickly. But the speed at which we're progressing is potentially not that great for humanity, potentially.
So, to bolster what you say, just over a year ago, it was 2023, I had to go and use Google to find it, but around about the 1st of April 2023, there was a letter from a large group of tech researchers suggesting that work on AI should pause while people sort of contemplate some of the problems that it could cause. And in fact, one of the people who signed it was that very famous citizen from Botswana, Elon Musk. And that shows you, just that sort of example shows you how all of the thought, the concern, the reflection has gone out of the window. Now it's just about winning. And that, to bolster what you say, can't be a good thing.
And Stephen, that's exactly my point, is that we were in a space where people were saying, okay, this is getting pretty crazy. I do think that Elon Musk partially wanted to slow things down because he wanted an opportunity for Grok to catch up with OpenAI, which he had a lot of sour grapes about. So I'm not sure that there wasn't some self-interest there, but the world was moving towards saying, okay, we're moving at a somewhat steady but very fast pace. I just worry that now we're being told, okay, this is something that America has to win. We must win and we must be better. And I think that, first of all, we don't even understand what the parameters of good are. So is cheaper and more efficient necessarily a good? We now have the tool that can create AIs that exist at every level. From an entrepreneurial point of view, it's absolutely amazing that I can now house a version on a relatively affordable machine connected to the internet. I can have my own AI build running, an AI model running. I think that's absolutely wonderful. But I just do worry that we should have standards before we unleash this tool to absolutely everybody on the planet.
Richard Mulholland, thank you. Very thoughtful. Really appreciate the conversation. Founder of Missing Link and Too Many Robots. There's so much to sort of think about when it comes to AI at the moment. And I think Richard must be correct when he says things are rushing sort of too quickly, kind of headlong in a way. And that's really the issue. I suppose, though, you get to a moment sometimes when you realize that genie is just out of the bottle. It was out of the, I think it's out of the bottle here. It can never really be put back into the bottle. It's a bit like complaining that Rusty Erasmus is using a bomb squad. Once he does it and it's so effective, everyone's going to do it. And it's exactly the same thing here. You just can't really fight gravity. And I suspect that the genie is out of the lantern, the toothpaste is out of the tube. There are other analogies, if you like. But you just actually can't stop it. And that really is a great risk. So what's the response to that? I suppose we just have to take greater care ourselves around artificial intelligence. How do you do that? I'm afraid I'm not able to tell you.
The Money Show
with Stephen Grootes.
Good to hear from you this evening. Well, it's not often someone wins a case against the taxman here or really anywhere. It's a rare case of it happening against SARS in the last couple of weeks. It concerns a case in which a citrus farmer paid what they said was a 10 million rand premium for self-insurance. They then wanted to deduct that under the Income Tax Act. SARS, well, you know what SARS said, right? Of course they said no. The farmer went to court and won. Jean-Roux van Heestien is a director and tax attorney at TRM Tax Attorneys involved in this case. Jean-Roux, good evening. This is fascinating. Firstly, what was this farmer actually trying to do?
Hi, Stephen. Thank you very much. So this farmer was really just trying to protect themselves. They operate in the citrus industry, and they had a bad case of black spot disease and false codling moth, which is also a term that I only came to learn about during driving the litigation in the tax court. And they were just losing money in the exporting of their citrus and so on, and they were looking for a product that would just help them with insurance, something that they felt there was nothing on the market for. And they were introduced to this product, and we refer to it as an unconventional insurance product. And the reason we say that it's unconventional is you pay, in this case, 10 million rand, and in exchange for the 10 million, you get about 12, 13 million rands worth of cover. It varies from contract to contract, but they thought that was a good deal. There was an added benefit that if they didn't claim throughout the duration of the insurance product, they could actually get their money back plus some interest. And that is where the commissioner had a bit of a problem with the deduction that they claimed.
Okay, so just a couple of things for clarity. He wasn't paying it into his own bank account in the way that some people do. I put a certain aside a month every day in case there's a robbery or in case my phone breaks. He was paying this money to someone else.
Correct, 100%. He had an insurance contract with one of the big insurance houses, but obviously with taxpayer information being confidential, I'm not allowed to disclose which company it was. But he was paying into a different bank account with a contract underlying the agreement and everything.
Okay, and then was the concern just that he could get the money back with interest? Was that what SARS were worried about? Or were they, in other words, they were saying, yes, you're paying a premium, but you're not actually because you're going to get it back. Or if there is black spot, you're going to get paid out. So either way, you're not, in most of us, you put something away for insurance, you don't get the money back.
Correct. So SARS basically had two issues. Firstly, they said, well, it's basically you putting your own money away. You're not really letting go of your money, so there's no expense as such. And even if there was an expense, then all you're doing is creating a capital asset or capital reserves. So that was their main issue with the premiums and the way that this arrangement was structured.
Okay, so SARS disagreed. He clearly felt strongly about it. I mean, a fair amount of money, I suppose. What did the final judgment say? Or to put it another way, why did the court find in your favour?
So the court found in our favour. So also, I think just to take a quick step back, at about August of last year, there was another matter where it was, and that matter was published as taxpayer Grootes. And in that matter, the court said that it's not a deductible expense. And so it shows that different cases can have different outcomes, because in Grootes, the court considered the evidence before them and said, no, you're just creating a capital asset. But here the court said, listen, we can clearly see that you did risk assessments. They had about 100 and something citrus orchids that they needed to insure, but they didn't have the cash flow for that. So they did a risk assessment. They said, okay, well, these 25 orchids are the highest risk for getting false codling moth and this black spot disease. So those are the ones that we're going to insure. And at all material times, they were really just trying to protect their business operating activities, because whenever they then would export to, let's say, Dubai or wherever they were exporting to, if anything is picked up on that side, they have to get rid of all of the fruit that they've harvested from those orchards and nearby orchards, and they lose out on money. So the court said, if I have to look at all of this, then clearly the taxpayer was not creating a reserve fund or a capital asset. They were really expending money in order to protect their business income earning activities. And on that basis, the court said, firstly, there was an expense. We exchanged one asset for another. And secondly, there was no capital asset creation.
Okay. Would it have been... Okay. A couple of other things. So if this product's been offered for some time by an insurance company, I'm slightly amazed that your client was the first case of this. I mean, SARS must have come across this before. I mean, citrus is a huge industry.
Yeah, so a lot of matters have been settled where taxpayers have just felt that the risk of taking SARS to court is a bit too big. But in this instance, the taxpayer felt that, listen, they have done absolutely nothing wrong. They had no intention of defrauding anyone. They really were just trying to insure themselves, and they thought that it was well worth the risk. But you are quite correct in saying that it's definitely not the first time they are dealing with it. They have raised a lot of assessments through the audit processes with similar matters.
Okay. I mean, the facts of the Grootes case must have been substantially different to come to a different outcome. That said, SARS will be very aware of a precedent. I think you've met SARS, Jean-Roux. You know, they like to get their money. One presumes they might think, well, okay, we've seen this, heard it on the Money Show, now we have to appeal.
Yeah, anything is possible. But there was an added layer of complexity to this matter, and that gets more towards not the substantive charging provisions, but more taxpayer rights in the sense of statutory immunity. So just to explain what that actually means. So in our tax law, if you file your income tax return now, you would get immunity from SARS raising additional assessments for 3 years after filing that return. And what happened in this case was the taxpayer filed their return. The return was verified because obviously there was a sudden increase of 10 million rand on insurance expenditure. The insurance expenditure was explained away and they were given policy schedules. And then SARS said, okay, we're happy, there's no issues. And after the 3 years had lapsed, they then tried to do a full-blown audit and then they raised additional assessments. So another hurdle that SARS then had to try and get past was to show that there was some fraud or misrepresentation happening. And because of that, there was an undercollection of tax. So they couldn't get over the hurdle. And on that basis, I think that the appealability of the matter is a bit in the balance in that it's not just purely a substantive question. So whether or not they will appeal, we'll have to see. Their last day for doing that is early Feb. But at this stage, we've heard nothing about an appeal pending.
Okay, so just to be clear, was that the only reason that the farmer won, or did the farmer win because the tax principle is that despite the fact he got himself insured using this particular product in a way in which he either gets paid out if there is an adverse event, or in which he will get his money back plus interest if there's no adverse event over the 10-year period, that he still should not have been paying tax on that?
So he won because of the tax principle, that it was an allowed deduction and it was never a capital asset.
Okay, there's going to be a lot that's going to come out of all of this because this is going to make people, particularly people in this industry where I imagine insurance is very important and a lot rides on it, people are going to be looking at their policies very, very closely. I mean, other people will follow this person's lead and the product of the insurance company you quite correctly are not naming at this point could suddenly become very popular.
Exactly, and I mean that's exactly the type of trend we saw after Grootes came out last year, where all of a sudden everybody in the industry sort of felt anxious and panicked, and some of the taxpayers actually just ended up paying the tax, not thinking any further because they had seen this. So I do think that now it shows us that just because you have this policy doesn't automatically mean you qualify for a deduction or you don't qualify. You actually have to go and look at what your policy says.
Thank you very much indeed. There's so much to look at there, isn't there? There is so much just to sort of try and understand exactly what's happening. Jean-Louis van Haastien is the Director and Tax Attorney at TRM Tax Attorneys. Does just tell you, of course, of how much is going on and how technical you sometimes have to be when it comes to issues around tax.
702. Stephen is on X.
At Stephen Grootes.
I can't wait for the day when you have your artificial intelligence model going up against SAR's artificial intelligence model to decide which of you is right about tax. And all you need to do is press a button. Can't wait for that to happen. And you will see, if you really want to see funding increased in artificial intelligence models for personal use, well, that, I imagine, is where it will happen. And if you consider how the way in which you pay tax, the way in which it is calculated, the way in which you file it has changed so dramatically now, where so much information is already owned by SARS, already in their possession, let me use that phrase, and made the process so much easier, I'm sure it is only a matter of time. Just gone 7:30.
The Money Show.
Shapeshifters.
Well, there's so many different problems that we face. Sometimes it's easy to forget which are really the most important. Surely the biggest, longest term project, the problem that we have is about reforming education. I say this because the real problem is that we have a large number of young people who in some ways have been, I suppose, betrayed by the education system, and as a result find it very difficult, almost impossible, to provide a sustainable income for themselves and for their family. And as a result of that, any kind of shift, change, even a nuanced change, can be really important. And so I was interested to hear that Nkanyezi Mokari is taking over as the CEO of Future Nation Schools. Nkanyezi has agreed to be your shapeshifter this evening. Nkanyezi, good evening, and thank you so much for taking the time to talk to us on The Money Show.
Good evening, Stephen, and good evening, listeners.
Education
Thank you so much for having me.
Sure. Education is changing so quickly. It's so fundamental to everything that's happening in our country. When did you first realize this was something you wanted to be a part of?
So interestingly, so I'm a chartered accountant by profession. I never saw myself in the education sphere. Started off after articles in an international investment bank in the mergers and acquisitions team. And then after that, I went into private equity. I worked at one of the biggest private equity funds in Africa, in Johannesburg. And then at the same time as I was doing that, my father had started Future Nation Schools under the Sfiso Learning Group umbrella. And in 2018, he approached me to join the team. And like I said, it wasn't in my plans. But it came at the right time because I had sort of been grappling with an existential crisis, working in finance, of what kind of impact I was making, working with spreadsheets and PowerPoint presentations and, companies that you never really get to feel or touch. It was just feeling quite intangible. And I remember thinking maybe I should have been a doctor because at least, you see the difference that you make. Maybe accounting wasn't the way to go. And so getting into education, I think, really helped me with that crisis. Because, working with in schools and seeing the change that you're making is something that really motivated me. So that's how I ended up in education.
I mean, the passion of your father comes through when he talks about this. And it's interesting that you sort of, both started with sort of numbers and ended up in the same place. I mean, I don't know if that tells us anything, but I find that really interesting. I mean, were numbers something that fascinated you from a young age?
Oh, yeah. I mean, I've loved numbers since early on. And I think growing up, my dad was a chartered accountant. My mom was a doctor. And getting to visit them at work, I got to know what kind of a future I wanted. When I'd visit my mom at her surgery, it wasn't glamorous at all. Sick people. She was making a huge difference. But I knew I wanted to work in an air-conditioned office from a young age. And so from pretty early on, I was like, okay, I'm going to be a chartered accountant, and never really swayed from that decision.
In case you're wondering, we're talking, of course, about Judy Dlamini and Sizwe Nkosana, people that you've heard on the Money Show before. I must ask you, Nkanyezi, I mean, you're growing up, and if we just go back a little bit, if you don't mind, and you're sort of towards the end of high school. What were you thinking of doing at the time? I mean, I went through so many different things at the time, and before journalism, I actually wanted to be a sound technician, and strangely ended up in this kind of mixture of the two. But I mean, what were you thinking at the time? Was it always going to be the kind of finance track for you?
Yeah, I mean, the finance track was definitely always number one. I remember in matric, I started having second thoughts and thought maybe I should be a plastic surgeon. I think, I don't know what I was watching at the time, but I was like, that seems like quite a cool job. But then ultimately, the accounting stream won. I remember my dad sat me down right before I went to varsity, and he said, "Are you sure you don't want to be an engineer?" And I was like, I had the worst science teacher in high school. And I was like, no, I hate science. So it's crazy how, teachers can shift your future. But yeah, it was always accounting.
Yeah, no. And I mean, I suppose in a way, what people, often look for is a sort of meaning and purpose. And many people I speak to in this segment, they'll be starting a business, or they've run a business for a long time or something, and they find real meaning from it. And you can't always find meaning in numbers, but for what you're doing now, there's a very real way to do that.
Yeah. So when I initially joined the group, I joined as the head of capital investments. So my job was really to deal with the lenders and, the different stakeholders and make the balance sheet efficient. And that eventually morphed into me taking over as CFO of the group. And now most recently as CEO of the schools. But yeah, I think my experience in private equity and investment banking put me in a good position to analyze the business from, a commercial point of view. I mean, you're never going to make a ton of money in education in running schools, but it was important that the business was sustainable. And, as commercially efficient as possible. So that was my initial role. And, you get to learn a lot about the business by being at the schools and understanding your customer, whether it's your parent or the kids. So initially, when I started as the head, I was, taking parent meetings and really trying to get down and dirty and understand the business properly, which I think was good experience for me.
I mean, the thing about education is really tells you what's happening in our society and the problems that people face and the struggles that they have with their children or getting the best for their children. And I'm always lucky enough to be part of a really strong primary school community, high school community too, but I found primary school, there's a greater sense of community. People will do anything for their kids, and they'll do anything for the community around it in a way that I don't think they do for other things.
Yeah. No, 100%. I mean, I think the hardest part of my job initially was having to financially exclude children at the beginning of the year. Obviously, we're an independent school, so we rely 100% on school fees to keep the business going. And that means, if parents are behind on fees, we have to financially exclude those kids. And that's not nice for anyone to do. So, yeah, I mean, you see people at their worst when you tell them that their kids can't come back to the school. I've had parents, threaten me with violence and stuff like that. But ultimately, I always take it back to, if we don't collect the fees, then we can't pay the teachers, and the teachers have bills and bonds and, school fees of their own to pay for. So, yeah, it's tough. I mean, working with children is quite a precarious situation to be, but we do it the best we can.
And often that's because the person who's paying is one person, the person receiving the service is actually someone else. It's not a direct relationship.
Exactly.
That makes it so complicated, I think.
Exactly.
This might be a strange question, but having such prominent parents, so when I speak to, I've noticed over time, for some people, it's not just that they have broader horizons because they, have certain educational outcomes or whatever. It's also because they get a certain amount of confidence. And when, we've had, a few years ago before the pandemic, I'd often work with interns who would come through wherever I was working at the time. And you could almost spot someone had some sort of, prominent parents because they had a sense of confidence. They didn't have a fear that a lot of other people have when they speak to an important person or when they cold call someone and ask them for money for whatever it is that they're doing or things like that. Did that happen to you, maybe? Is that one of the reasons you were able to succeed?
Look, I mean, I can't deny that I come from a place of privilege, and that has knock-on effects in how I view the world. But I've definitely been in situations where I'm terrified to speak to, someone with authority. And I've always known that who your dad is or your mom is can only get you so far. Ultimately, it's hard work that's going to get you to where you want to be. Who my parents were didn't matter in varsity. It was, how much I studied that was going to get me, to be successful. In the investment bank that I worked in, the culture was horrific. I mean, working minimum of 80 hours a week. It doesn't matter who your parents are. You have to put in the work. Yeah. So, I think I learned hard work from an early age, whether, my privilege has helped me in terms of my success. It's probable. I think there's a lot of luck and things that you're not in control of in life, but you control the things that you can.
I was about to say exactly that. And the one thing you can control is how much hard work you do. And so exactly. It really works. I mean, everyone, I think that's one of the big important lessons. There's a bigger conversation I'd like to have quickly about education if we can. So it's obvious to any outsider, and I'm an outsider to education, that a lot needs to change. And we can all sit down and have a conversation. We want this, we want that. It's much harder and much more difficult because of the trade-offs to have a conversation about what can be changed and what can't be changed. So I, for example, would like to think what could be changed is that every school should be a place of safety for children. Now, I realize that would actually be quite hard to achieve. Are there certain things you think at this stage we can achieve in education? We can't have everything. We can't look after children outside school, for example. But are there certain things that when you look at the sector, you think, we could do this, it will require X, Y, and Z, but this is actually possible? And when it comes to education, a lot of it's political, in Kanyezi. I mean, obviously you know that.
Yeah. So, I mean, interestingly, our tagline at Reach a Nation Schools from the beginning, I mean, we launched in 2017, and our tagline is someday all schools will teach this way. And the way in which we teach is quite different. So firstly, we are very proudly South African and African. We want to be a home for the African child. As someone that, grew up and went to independent schools where, the students were predominantly white and didn't look like me and didn't live in Imlazi like I lived, you learn to code switch from a very early age. And we want all students to come as they are, no matter your race or your background. This country has such a nuanced history. And so we want to accept all students for who they are. So firstly, the foundation is that we're very Afrocentric. And secondly, we use what's called project-based learning, where you put the student's voice and choice at the center of everything that we do. Each term we start with a driving question. The driving question at a grade R level, where, the kids are getting used to a more structured classroom, the grade R driving question was, how can we make our classroom more stimulating? Then, of course, you have to unpack what stimulating means to a 5-year-old. But the grade R's chose to have a little corner in their classroom where they could give each other massages when they were feeling stressed or whatever. To like grade 9, where the grade 9's driving question last year was, how can we use emotive language in elections? It was obviously during the build-up of the South African elections. How can we use emotive language to sell a political party? Now you've got elements of English in there, so throughout the term, the English teacher will be bringing that into the lessons. And then you've got statistical analysis that the maths teacher will, use to teach the kids about how you analyze data and who do they think was going to win the elections based on previous elections. And then they created their own political parties and had to canvass and run for office and, simulate things like that. So the kids sort of contextualize topics that are part of the curriculum in a real life setting. And so that's how differently we teach. And interestingly, we are now partnering with government. As part of Sfiso Learning Group, we also have a teacher training college. And we are planning on educating training more than 500 government school teachers on project-based learning this year. Starting with about 100 first part of the year. So we initially said someday all schools will teach this way, and now it's actually happening. We are training government school teachers. We're also training government school teachers in coding and robotics, which is very important, the use of technology in the classroom. So unlike other independent schools that sort of jump on the government is useless bandwagon, we actively work with governments to change how kids are taught across the country.
We're speaking, your shapeshifter this evening is Nkanyezi Makari, the new CEO at Future Nation Schools. We'll ask if she gets a moment to chill with all of these long days she's been having in the next little while.
You're listening to The Money Show with Stephen Grootes, brought to you by Absa Corporate and Investment Banking, proud sponsor of the African Mining Indaba 2025.
The Money Show.
Your shapeshifter this evening, Nkanyezi Makari, the CEO at Future Nation Schools, at 6 minutes now to 8. Nkanyezi, I mean, education is kind of a full-time business in some ways. Do you get a chance to chill? I mean, are there certain things you enjoy doing, whether it's, I don't know, mountain biking, karate, hiking, something like that?
Yeah, I mean, I've always enjoyed exercise. About 18 months ago, I stopped drinking alcohol, and that forced me to get hobbies. So I've taken up gardening. I love being in the garden, and I'm always in, the nursery on weekends. So yeah, I think that's how I unwind.
I live with a gardener, and I know how people can really come away from it just feeling a lot better about their lives. One of those things that gets you out of your head almost.
Yeah, and to watch something grow. I mean, I planted this rose bush. I just can't believe how beautiful it is now. And from nothing to I love it so much.
And to sort of be in charge of it, I think, is also like part of it. And of course,
it's also humbling. I mean, when your roses die or your hydrangeas die, it's very humbling.
And getting sort of soil on your hands. I mean, I know some people have you put your hands in it, you feel it, you touch it, you get scratched by it, all of those things. It's a very physical experience.
Yeah. I get my kids involved. I bought them little shovels and buckets, and they help me. And they were a lot more gung-ho at the beginning. Now they see it as a proper chore. But yeah, it's fun for the whole family.
I was going to say, I'm sure that was coming. Do you get to travel very much in Nkanyezi? I mean, a lot of people, will have family holidays they remember. Some people have special places in South Africa. Some people have special places where something happened overseas.
Yeah, I think put me anywhere near a beach and I'm happy. Particularly the Indian Ocean. So the east coast of Africa. For a long time, I wasn't traveling in Africa, but over the past, I'd say 2 years, my husband and I have made a concerted effort to see more of our beautiful continent. So my only stipulation with travel is there must be water.
Yes. Okay. No, I hear you. And reading. I mean, I'm fascinated. Some people, are only fiction. Some people are only non-fiction. I've been mostly fiction, but more and more I'm finding, sort of non-fiction. And I think that's partly because some of the histories that I read are just, you couldn't make them up, some of the stuff that happened. I know some people also just focus on sort of leadership books, which I'm sorry to say this in Kenyasi, are not really my bed of roses. What do you prefer?
I'm a non-fiction girly. So currently just started The Conscious Parent. And then I also take in a lot of secondhand content from my husband, who's obsessed with Audible. So family road trips, we're usually listening to business books, which, like you, not really my cup of tea, but I found that you still pick up a few nuggets in those business books. So yeah, the last one we listened to was Guy Hans, who is some private equity heavyweight, his story, which was, quite interesting.
Yeah, no, I mean, people do. I mean, the story of business is usually the story of humans doing things, and that's what makes it sort of so interesting, almost no matter.
100%.
Yeah. Do you get to switch off for a long time? I mean, do you get to do the traditional Southern African Christmas holiday? I suppose in the school business you do.
The teachers do. The accounts department does not. We enroll up until the end of January. So, the accounts team is busy with enrollments right through. I think we only really take Christmas and New Year's, that week off. But we're dealing with parent queries. A lot of parents leave things to last minute, and we want to be available and there to help them. Be ready for the school year. So not really. I think my first break comes in Easter time.
One of the joys of doing what I do is that I'm able to start the day with a huge sense of curiosity, because I never know what's really going to happen. I knew today that I was going to talk to you, for example, but I didn't know what we were going to do in the first hour of the show. And that's just the way my life is. And I'm quite lucky because I can start the day with a sense of something. I imagine you start the day with a huge sense of purpose as well. I don't know if you drink coffee or tea, but, as you're sort of getting that going, and you'll have children to sort out and all the rest, of course, as I do. But you'll be thinking to yourself, gosh, I wonder what's going to happen today. But there must be a sense of purpose to it, which must be, quite enjoyable.
Yeah. So in the mornings, on the way to school, my kids and we usually pray in the car on the way. And I know it's quite unorthodox. Usually people pray in the evening before bed, but it allows me also to get a sense of what's on their mind for the day. What are they praying for? What are they grateful for? Sometimes you can see what they're worried about because, my 4-year-old will say, I hope everyone likes me and I hope they play with me, or, something along those lines. And it just sort of no radio in the car, silences everyone. We pray. And then after everyone's prayed, then we switch the music on and we have a good time.
And Kenyasi, thank you. Thank you for telling us so much about yourself. Fascinating to listen to. And Kenyasi Makari is the new CEO of Future Nation Schools and your shapeshifter on The Money Show this evening.
You're listening to The Money Show with Stephen Grootes, brought to you by Absa Corporate and Investment Banking, proud sponsor of the African Mining Indaba 2025.
That's it for The Money Show. We, of course, will be back with you tomorrow. Looking forward to it already with a sense of curiosity. Good evening. It's 8 o'clock.